Hey, how's it going guys? It's Michael here. So Vanguard Australia recently announced that they are updating their fee structure on their Vanguard Personal Investor product. And to cut to the chase, they've made some pretty significant changes. I wasn't super impressed with the product when it launched in 2020, which I covered in my original Vanguard Personal Investor review. But with these recent product changes that are going live on 18th of August 2021, or already live depending on when you are watching this, I want to do an updated review to cover what's changed and whether it's worth using or not after the changes to the fee structure. So in this video, in addition to going over the recent changes, I'll do a detailed review of the Vanguard Personal Investor offering in Australia and how it actually stacks up compared to purchasing Vanguard ETFs through another stockbroker, and also how it compares to investing directly into Vanguard Retail or Wholesale funds. This way you will know exactly in which situations it will be optimal for you to use the Vanguard Personal Investor in Australia, as it's not actually that straightforward. And just quickly before we go into the video, if this type of content is useful to you, I would really appreciate it if you can hit the like button down below for the YouTube algorithm. For those of you who don't actually know who or what Vanguard is, I'll keep this brief, but Vanguard is basically a fund manager and is actually the largest provider of mutual funds in the world. And in Australia, they are by far the most popular fund manager and ETF manager in the country. They've got 82 funds with over $164 billion of assets under management. They also won a bunch of awards related to investing and managed funds. Now, in terms of the Vanguard Personal Investor product, it's essentially a Vanguard created ASX stock brokerage account for investing in Vanguard funds or other ASX listed shares or ETFs. So now on to what's actually changing with the new fee structure. At a high level, it seems like they've completely pivoted the product to be a lot more attractive for buying standard ASX shares or ETFs. But I'll go through the changes line by line and give my thoughts. Firstly, they've completely removed the 0.2% annual fee that was applied on your Vanguard cash account, Vanguard Managed Funds, or Vanguard ETFs. However, they have kept the fee for any ASX shares that aren't Vanguard ETFs and reduced this to just 0.1%. Clearly, this is a pretty great change and frankly a fee that they shouldn't have been charging to begin with. Still a bit disappointing that they've kept a fee for non-Vanguard shares, and to be honest, this is probably going to make it tough for anyone to consider using if they're thinking about investing in anything other than Vanguard ETFs or Vanguard managed funds. Now, the brokerage fees have actually also changed quite a lot. No longer is it free to purchase additional units of Vanguard ETFs, and it will now cost you $9 a trade, which was actually one of the big benefits of the Vanguard Personal Investor product before this new fee structure change. And now if you want to purchase any other ASX shares or ETFs that aren't Vanguard, they'll also only cost $9 a trade, a pretty significant reduction from the $19.95 or 0.15%. Brokerage fees for the Vanguard managed funds have remained unchanged and are still costing nothing, which is great. Interestingly, if you actually dive deep into their PDS, you can actually find another fee element that is changing but isn't listed on their main pages. And this is their indirect cash management fee, which is essentially a fee that is paid to Vanguard directly from the bank that is providing the Vanguard cash account and is not a fee that is deducted from your account. What this actually does mean is that the interest return that you would normally receive from funds in the cash account will be reduced and is certainly not a competitive interest return that Vanguard Australia states on their website. The interest return you actually receive at the time of recording this is only 0.35%, which is extremely low, a lot lower than anything else out there in terms of a savings account. Now, I know what you're gonna say. Normally with most stock brokerage types of accounts, you would keep very little to nothing in the actual cash account. However, with the Vanguard Personal Investor, they actually deduct the account keeping fees from this cash account. So you're kind of forced to keep a certain amount of cash in this account to cover the fees at all times. Now, lastly, the final item that seems to be changing, and again, conveniently left off the main page, is the fee cap of $600. Previously, all account fees would be capped at $600 a year. However, in this new fee structure, this detail seems to have been omitted, which means for larger portfolios, basically anything greater than 600K, this is definitely something worth considering for the future if you're going to be thinking about using the Vanguard Personal Investor for long-term investing. Now, onto what's not actually changing. Firstly, the minimum investment amount of $500 hasn't changed, which makes it pretty accessible, but not quite as low as some other competitors that have come up more recently. The types of investment products that you can invest in through the Vanguard Personal Investor product also hasn't changed, which are Vanguard Managed Funds, Vanguard Australia ETFs, and a selection of ASX shares. Note here that not every single share available on the ASX can be purchased through Vanguard Personal Investor, just the top ASX shares by market capitalization. So again, not that flexible and really leaning towards just buying only sort of Vanguard funds or Vanguard ETFs. And in terms of fees for setting up the account, there's nothing that's changed here as well, with no fees for opening up an account, no fees for transferring funds into the account, and no withdrawal or exit fees, which is always great. So how do these changes actually stack up? Now, looking at just the changes in isolation, they're actually pretty good overall, with most fees reducing or completely disappearing. But I think what has actually resulted is an extremely niche product that's only really great for investing in Vanguard managed funds. Let me explain with an example of a mixed fund portfolio and a Vanguard fund only portfolio using the Vanguard Personal Investor Australia product. Now, if you looked at investing in a mixed portfolio of 50K of both ASX shares and Vanguard ETFs, on the old fee structure, you'd be charged fees of $127.25 per annum. Compare this with the new fee structure that's launching on the 18th of August 2021, where you'd only be charged $52 per annum, which is really nice as the fees have reduced by more than half. However, if you compared this to holding shares in a standard Australian stockbroker, it's still not a great outcome, as you wouldn't be charged a 0.1% account management fee on all your other investments, aka anything that's not a Vanguard product. Now, if you're just buying Vanguard ETFs, the offering is quite attractive though, as there are no management fees and the brokerage costs at $9 are very competitive. But it becomes very similar to most other low-cost Australian stockbrokers in terms of cost. And you lose the added flexibility of investing in the entire ASX, whilst also having to pay additional fees for any non-Vanguard products. But if you're just looking to invest in Vanguard managed funds, then this is where the Vanguard Personal Investor is the ideal product, as there are no account keeping fees and no brokerage fees as to buying more units. However, you do have to remember that the managed funds have higher fees than their equivalent ETFs. If we just look at the Vanguard Australian shares, for example, the ETF has a management fee of 0.1% per annum, whereas the equivalent wholesale managed fund has a fee of 0.16% per annum. But there is the added benefit of no minimum investment amounts other than the initial 5K. So if you do prefer investing in small parcels of less than $500, which is the minimum transaction size for ETF purchases, then that is one small advantage of using the managed fund route, even though you have to pay more management fees per annum. So for investors who would like to make frequent, smaller transactions, this is probably where the Vanguard Personal Investor product shines, as it's very likely the $9 brokerage fees would add up to more than that 0.06% per annum fee that you were hit with for using the managed fund equivalents of the ETFs. And just keep in mind that that's just the difference between the Vanguard Australian Shares Fund and the VAS ETF. The difference between other Vanguard funds and their equivalent ETFs could be larger or smaller. Basically, I think I would only recommend using it if you are looking to invest solely in Vanguard managed funds, because you would like to make frequent, smaller investments and you don't have a large portfolio where the added management fee of that 0.06%, for example, it doesn't have a material impact on your portfolio. Even if you are someone who likes to invest in just Vanguard ETFs, I kind of have problems with recommending this product, as there's actually other low-cost Australian stockbrokers out there at similar or even lower brokerage costs in some cases. Actually, the biggest problem with the Vanguard Personal Investor is that the shares aren't actually held in a CHESS-sponsored model, which means you don't have the added security and flexibility of a broker who does use the CHESS system. Now, if you're someone who's investing in both Vanguard listed products and other shares on the ASX or ETFs, then I just wouldn't recommend using Vanguard Personal Investor at all. Even after the 2021 fee changes, it still isn't competitive enough, and the extra fees plus the lack of CHESS holdings means it makes little sense to use this versus another Australian stockbroker, like Self Wealth, for example, that has comparable brokerage fees. Now, in summary, the Vanguard Personal Investor Australia product really is in a much, much better place after these fee changes, but still only makes financial sense for a small set of niche Vanguard only investors. Personally, I don't use the Vanguard Personal Investor and don't plan on using it even after these fee changes. This is mainly because the ETF market in Australia has become extremely competitive and continues to do so, and there are a lot of lower fee alternatives to many popular Vanguard ETFs. For example, there's the BetaShares A200 ETF, which is a competitor to VAS, which has 0.07% per annum fees versus the 0.1%. And there's also DHHF versus VDHG, which has a slightly lower management cost, and it's also a very, very similar product. And lastly, at the moment, I'm mainly holding ETFs from funds other than Vanguard, so it just wouldn't make sense for me personally because of that added 0.1% per annum fee. So with that said, guys, thank you so much for watching the video. I really appreciate it. If you guys made it to the very end and you haven't already subscribed, make sure to hit that subscribe button down below. I post videos on investing, money, and personal finance. So if you want to stay tuned with that, make sure to hit that subscribe button. Let me know in the comments what you would like me to cover next, and please just hit the like button to help share this video to a wider audience. Thank you again for watching, and until next time, peace.